Stunning U.S. election results overwhelmed rumors about oil supply coordination last week, leaving oil prices unsupported by news reports. Indeed, the physical oil market remains oversupplied. Long-awaited balance keeps getting delayed. According to the International Energy Agency, U.S. Energy Information Administration, an organization of petroleum exporting countries, the market edged the wrong way in October. In monthly projections published earlier in November, all three agencies implied slight month-to-month increases in expectations for annual average balancing values, mainly inventory changes. Because IEA and OPEC do not project crude production by OPEC members, OGJ calculates balances using year-to-date averages for that crucial variable. However approximate, the numbers show inventories continue to build, albeit at diminishing rates. The market still has too much oil. Even worse, among projections for 2017 by IEA, EIA, and OPEC, only IEAs suggest an inventory decline next year. Production is high at present from the important members of OPEC and Russia, who will be party to any agreement that emerges from Vienna at month's end on supply management. When OPEC in September disclosed work towards such an agreement, the target range indicated a group production cut of as much as 740,000 barrels per day. OPEC also requested cooperation from outside its membership, namely Russia. More recently, the possibility of a production freeze has entered unofficial conversation. A freeze differs importantly from a cut. With output already high, the important producers would more readily embrace and adhere to a freeze. Much of them cannot produce much more than they are now, although Saudi Arabia insists otherwise. A freeze essentially would enshrine present circumstances, with low-cost suppliers producing at nearly maximum rates and higher-cost competitors slashing output. That, by the way, is how markets classically work. Targeting either a freeze or a cut, any agreement would stimulate an oversupplied market obsessed with headlines. With OPEC's internal politics historically touchy, of course, even a freeze might be too much to expect. Anything's possible, though. Supposedly learned observers, after all, did not expect Donald Trump to be elected president. I'm Bob Tippie, editor of Oil and Gas Journal, and that's the editor's perspective, which appeared first in text at www.ogj.com on November 16, 2016.